have you ever wondered why does that happen? Why does the price come back, take support exactly around these areas? What is the notion behind that? What is the meaning? What is the logic behind that? All of that is going to get cleared in this video. This is something which is going to make you a lot of money. This is not a strategy, but this is a perspective of how big banks think and how big banks enter into a trade. So if you're looking for a strategy or a shortcut which gives you, very quick profits, I put some indicator and see, you got a risk and reward of 1:10. Okay, you could have entered here and you could have exited here, This is not that type of a strategy, guys, because I was trading in certain banks. So how the trading flow looks like when you're trading in a real bank, that's what I'm going to teach. You can see that. Everybody can see, right? You can see, your postman can see, your neighbor uncle can see, your next house dog can see, everybody can see this. And guys, I'm telling you, this is what the banks want you to do, and they keep doing this again and again and again until and unless you realize this perspective from the bank. So this is what the bank keeps doing again and again just to eat your profits and your stop loss. So your stop loss is nothing but liquidity to the banks, and they keep doing this pattern over and over again and again. And until and unless a retail trader figures out this one, he cannot be profitable. Done. This is going to be our logic. Okay, it's something like the market goes in search of water, and the water in this scenario is nothing but liquidity. Hi guys, welcome back to the channel. So guys, today I'm going to teach you a perspective which is going to change the way you trade. I'm not going to teach you a strategy because you can find that everywhere on YouTube, but I'm going to teach you a perspective of how the banks enter, because having practical experience how the trading flow looks like in the banks when they're punching in big orders is a complete different ball game from any strategy whatever as a retailer which we have. Okay, so before I could start off, I would want to tell you that once you learn this video, the way you think about markets is going to completely change. All right, no matter what strategy you have, you can have that, but this is a perspective which I'm going to give you, which only the big banks have. Right, so this is a very valuable strategy, and I want you to watch the video completely and watch this at least 2 to 3 times so that it gets deeply imprinted in yourself. Okay, and if you're busy right now, please don't watch the video. Put the video into watch later and then watch it when you're completely, because guys, I'm going to tell you something which you have never encountered before, and I'm giving you a disclaimer now itself. This is not a strategy, but this is a perspective of how the big minds are programmed and how the retailers are not programmed. So once this gap is bridged, there's a lot of advantage which a retailer can get, and the best part is there's a lot of chances for a retailer to start punching in orders like the big banks. Okay, so before I could start off, I'll just tell you a basic logic. All right, so let's say, why does the market move in a certain direction? Okay, let's say, the price moves in this pattern. We all know this, okay, creating higher highs, higher lows, and all sorts of these things. But have you ever imagined why the price exactly moves in a certain way? Okay, let's say the price came here, created a swing and then broke this high, went up. Now this resistance becomes a support. That's the simplest thing which you can find in all the YouTube videos, right? But have you ever wondered why does that happen? Why does the price come back, take support exactly around these areas? What is the notion behind that? What is the meaning? What is the logic behind that? All of that is going to get cleared in this video. And guys, I'm telling you again, this is going to be the only video which you will require to change your perspective. This is not a strategy, but this is a perspective or the missing piece of puzzle which is which can change the way you trade. All right, so in this example, let's say the price came here, went up and took a support, again went up. So if the price needs to go up, right, the price needs to have orders available in all these levels. Okay, only if there is open orders available, the price can actually go up, because it's only then the orders of the big players can be filled in, right? So if the orders should be available here, what do the banks do? The banks do something which is called as the inducement. Okay, it's called as the inducement. So banks basically, they induce retailers to enter, okay, make them enter the market, and once the retailer enters, right, they place their stop loss. Correct? That stop loss is what the big banks are looking for, and chasing that stop loss is what creates this type of a price action which you see right here. Okay, so all the game, all the plan of the big players is just to induce the retailers put their money into the market and wait for them to place a stop loss. And once the stop loss is placed, they come, take the liquidity, and then move in whichever direction they want to go, right? So now once we get to know this, our logic is we need to find where the liquidity is lying. Okay, that is the very first scenario. So in order to do that, you need to understand one thing which is called as inducement. Inducement, I'll keep it short, it's a complete different ball game, but I'll make it very simple for you. Inducement is nothing but inducing the retailers to enter the trade. Okay, it is that simple. So for the first thing, what you're supposed to do is you don't need any indicators on the charts. All you require is just price action and some lines for you to draw. Okay, and that's all. And the big banks just use this. So the first thing is you need to understand where is liquidity lying. So in order for you to understand where the liquidity is lying, you need to understand inducement. Okay, exactly in which area, right? In which area the big players are inducing the retailers to get inside the market. That is called as the inducement. So the first thing is inducement, and after inducement comes liquidity, right? So now let's say we'll spot liquidity followed by the inducement, or inducement followed by liquidity. It goes both ways. Okay, so in this particular case, right, let's say this is the morning trade, and we can see some sort of a trend line down here. So when we see this, right, when there is a swing here and when there is a swing here, what happens, the retailer comes, punches in their order to go short, because we can see that the price has actually come up here, took a resistance, went down, again came here, took a resistance and went down. So when this happens, we connect these two lines and draw a trend line. And again, when the price comes here, what we do, we think the price from here, it'll go down. Okay, it'll go down. This is what we think. And then a retail trader will enter right here and keep a stop loss somewhere around these areas, and then aim for a risk and reward of 1:2, right? This is how the retailers are programmed. And this is exactly how the big banks want you to be programmed, because then they can take your stop loss, take the liquidity and make profit. Simple as that, right? This is the perspective. Always think over. If you're looking for a strategy, for a shortcut, guys, this is not the video for you. This is something which is going to make you a lot of money. This is not a strategy, but this is a perspective of how big banks think and how big banks enter into a trade. So if you're looking for a strategy or a shortcut which gives you very quick profits, I put some indicator and wow, see, you got a risk and reward of 1:10. Okay, you could have entered here and you could have exited here. This is not that type of a strategy, guys, because I'm here to give you some real knowledge. I'm here to spill off some real knowledge which I have. I was trading in certain banks. So how the trading flow looks like when you're trading in a real bank, that's what I'm going to teach, right? So coming back, so this is what a retailer does, right? So this is nothing but it is an inducement for the retailers to enter here, keep this stop loss, and then place a target. So this is called as the inducement. So once the inducement happens, you need to understand that there is liquidity. Okay, or there is liquidity and inducement. Both goes hand in hand. So now what a big player has done, he has made a retailer get induced into the market, okay, and made him keep the stop loss. And then you can see the market went against him, right? Correct. You can see that. Everybody can see, right? You can see, your postman can see, your neighbor uncle can see, your next house dog can see, everybody can see this. So now I will tell you how you can avoid these and how you can enter along the banks. Okay, so this is something, let's say it gave you a stop loss. So let's say your stop loss is hit. So the first thing what you're supposed to do is look for the next set of liquidity or inducement. So where is the next set of liquidity or an inducement? Okay, let's say this one, we have a swing here, right? We'll keep this one as a good one. Let's forget this. Okay, this particular thing, this is a trap. Okay, this is nothing but a trap, which is there's a separate topic on this. I will give you an idea on that. So forget about this. This is a trap. I'll just name this. So you need to find the liquidity. So how do you find the liquidity? Is quite simple. You need to have equal highs. Just look at any particular chart and you look for an entry. Okay, right here we can see that the price came here. It rejected, went down. Again, it came up here. It got rejected. It came down. Right. So what the retailer does, he places the entry here to go short, and you can see how he's got trapped. Okay, for example, Okay, for example, this is how a retailer would be thinking. That is, the price got rejection here. That is, the price got rejection here, came again, took a resistance here, went down. So the third time when it came, he again thinks the market will go down because there was rejection 2 times. So what he does basically, he enters here, keeps his stop loss above, expecting the market to go down. Okay, this is what he expects. But you can see how the market trapped him right here. Okay, and guys, I'm telling you, this is what the banks want you to do, and they keep doing this again and again and again until and unless you realize this perspective from the bank. This perspective is actually a strategy or a missing puzzle which is missing in your actual strategy. This might not be a whole strategy, but this is a perspective which you can build over the strategy which you're already using, right? So, but what happened, we can see the retailers got trapped and it went down. So we need to see where the liquidity is lying, and that's where the market goes. Okay, it takes out the liquidity and then goes in whichever direction. The first thing is, it wants liquidity, it wants profit. Once the profit is taken, the price can go in any direction. It can either go up or it can either go down. So that's not our thing to find out. All we have to figure out is, the first thing, just figure out where the liquidity is lying. All right, so we can see something like that here, on the top, and same thing we can see here. If you draw a line, right? Okay, you can see the price again came here, bounced back. Okay, it got support twice. So again, the third time also this has happened. Okay, so this time what we can do is, we know that there is some liquidity lying above and below both levels. Okay, let us not consider that there is liquidity only to the upside. There should be liquidity even to the downside. Okay, let us not get biased, right? There is liquidity both to the upside and to the downside. So all we have to figure out is just find the liquidity. And once you find the liquidity, you need to understand that the price is going to move in that direction, right? So in this case, the market came down, right? It trapped a lot of people and again came down. So when the market trapped you right here, okay, what are you going to think? The market, fine, it trapped everyone and came back to the zone. So this time the market is going to go in the downward direction, because the market trapped you in the downward direction. But see what exactly happened here. Okay, okay, it is the opposite. The market here, it told you it's going to go up, right? The market here, it told you it's going to go down. Okay, so it made you enter, it induced you, but it took out your stop loss right here. Very similarly, very similarly. Okay, so once this happened, our perspective changed. Okay, fine, now this time, second trade, I'm not going to enter blindly, I'm going to go with logic. And what is the logic? It trapped everybody here, which means the sentiment is to the downside, so I'm going to go short. So once the price came here, everybody, okay, all the retail traders enter here, keep their stop loss above, and aim for a risk and reward of 1:2. Okay, this is what they do. And then there is a lot of liquidity lying around these areas, right? Why is there liquidity lying around these areas? Because very simple, it induced you to go down. And then see what the market did. The market went in the opposite direction. It went right in the opposite direction. You got it? So this is a perspective which builds your portfolio, guys. Okay, so this is what the bank keeps doing again and again, just to eat your profits and your stop loss. So your stop loss is nothing but liquidity to the banks. So they make you, the first thing is they induce you into the market, right? Then they trap you, or they take your liquidity, or however, whatever you call, you can call it as trapping you, or you can take it like a liquidity sweep, or that's how we call it in the bank. You can take it in that way, or whatever you say. The thing is, they want to come take in your orders and then keep munching into your orders. That's what they love doing it, and they keep doing this pattern over and over again and again, and until and unless a retail trader figures out this one, he cannot be profitable. And that's why a normal retail trader cannot be amongst the 10% of the most profitable traders, right? So now once you figure out, let's say, I'll give you one more example. Okay, so the market creates liquidity, right? It created liquidity right here and then came out. Okay, this time what you think? Okay, it trapped him here and again it came back down. So again you keep your stop loss and again it went up. So now one more example of how the banks trick you. Okay, so now we figured out it trapped you and it told us after trapping it is going to change the sentiment to the downside. So again you enter short here, but again the market tricked you and it went in the opposite direction, right? Now is a lesson learned for us. as a retail trader, it trapped here, told you it's going to go down, but it went up. Okay, so now what the market does, the market clearly understood that, okay, the retailer has learned his lesson right here, just to make sure that you are tricked again. So this time, let's see the same scenario, but the perspective changed again. Let me show you how. Okay, you can see the same kind of an equal highs here. Okay, so you mark this here stating that this is a liquidity to the upside, and now, okay, we mark this one as the support. Okay, so now we can see that the market came down here, right? So what we are going to do, we are going to take this one as a trap. Okay, so I'm going to make this look. Okay, so we are going to take this one as a trap. So now what happened, the market trapped, and we thought it's going to go in the opposite direction, but it went, in the direction of the market. Just like how we thought this happened, right? We assume that the same thing is going to happen again. That is, the market is going to come down, and it is going to make us feel that it is going to go down, but it actually goes in the direction where it is trapped. Okay, because this is what happened here, right? Because the market trapped everyone, and then it told it's going to change the direction to the downside, but again went in the direction where the trap was created. Okay, so once this psychology is created now to the retail traders, where the retail trader, after learning this particular lesson right here, thinks the market is going to repeat itself. So what the a person thinks is, once the trap has happened here, the market is somehow going to go like this and again move in the direction where it created the trap. Okay, it created a trap here, and it went towards the same direction. So again, we are going to look in the similar fashion, telling that the trap was created here. So again, the market is going to repeat the way it happened here, and we are going to look for selling opportunities. So what we do, we keep our stop loss, entry around here, these levels. Okay, and then keep our stop loss somewhere above, and aim for a risk and reward of 1:2. It did the opposite, right? It took the entry in the opposite direction. So it induced you to go short here, but now it went long. Here again, it induced you to go short, but now it again went long, right? So if you look at this particular chart, okay, we have two traps, but two different moves, right? See, the first one, it trapped here and it went in the same direction where the trap was created, which is the momentum to the upside. So what we think, again the market is going to repeat, the trap was created here, so again the market is going to come here, and now the market is going to go down. This is going to be our logic. So we can see how the market trapped. Okay, it creates perspective, it creates a mindset. It's all about the mind game, guys. Okay, so you need to understand where the liquidity is lying. All right, so this is a very short video, guys. Actually, this is a way a retail trader is different from the perspective of the bank. So yes, guys, this is the perspective which I wanted to tell you guys. There is a separate video on which I've taught how to enter liquid markets, which means how to figure out where the liquidity is lying, because market moves where liquidity is. Okay, it's something like, the market goes in search of water, and the water in this scenario is nothing but liquidity. Okay, so I'm going to teach you how to dig out water. Okay, you should know, when you look at a particular chart, you need to understand where the water is present, where the liquidity is present, because that's where the market is going to. So I made a separate video on how to spot liquidity and how to identify the system or the bias of the market. Okay, whether the liquidity is going to go up or go down, or whether the liquidity is going to be taken out and move in the opposite direction, or whether the liquidity is taken out and it goes into the same direction. Okay, it's a completely different video which I've made. So I'm going to upload that only after I get good response for this video. So please have a look at this video and like the video and comment if you like it, so that I'll be encouraged to post more videos like these. Have a good day and happy trading.